odd, I wasn't expecting that. And the reason I've called it that is because at the moment, equities are so volatile. It's a global crisis, stock markets crashing everywhere, oil prices going to the floor, people suggesting even that oil prices might go negative because there's no storage space available for the overcapacity that there is at the moment. You might actually be paid to store oil. Let's hope it doesn't get to that stage. So it's incredibly at the moment. And so bringing Charles on, if you don't know Charles and Easy Equities, he's the CEO of Purple Capital. It's a listed entity. I've got my numbers right. I think it's about 400 million for the share cap at the moment. And a couple of years back, I guess he came up with an idea, and we're going to be asking him about that, to go and set up this new form of investment vehicle called Easy Equities. And I thought it'd be really interesting to get him onto this particular call to see what he's seeing in the markets at the moment. And in our prep discussions, it came up that everything that I expected to happen basically isn't happening. Charles, why don't you kick off? I was expecting this would be an incredibly difficult time for you and your guys at the moment. Is that true?
Yeah, no, it's not. I mean, yes, the circumstances are proving to be difficult in that we're having to scale a business faster than we expected, all from home. And our infrastructure has never been under more pressure working from home. So, you know, everything that we rely on to run the business is under a lot of drip and pressure. But the expectation that I was sort of was drummed into me over my whole life was that in a crisis, South Africans don't pitch up. They go home, they take their money, they sell their assets, and they run away. And that is exactly the opposite of what we're finding. It's almost as if South Africa has been waiting for this crisis from an economic perspective in terms of investing in the opportunities and the outcomes. I mean, our client onboarding has quadrupled in just 6 weeks. The asset inflows have quadrupled over the same period. And so everything that I was sort of taught about South African and investors has proven to be untrue.
What do you put that down to? I mean, that doesn't make any sense. I mean, you've been seeing this for a couple of months. Why on earth are people starting to invest at the moment is just so unclear about the future?
Look, I think that, you know, for one, the asset prices in South Africa have been depressed for a long time. So they've been cheap, if you like. But there's been no economic blue sky for anyone to want to that has brought people to buy those assets. And I think what as a result of this crisis is what were cheap assets have now become bargain basement assets, and that everyone can spot a good bargain. And to a large extent, people are going, well, I've been looking for an opportunity to enter. I think most people have been hoping that GDP or economic growth would drive that decision. But fundamentally, crisis has driven it because it's pushed asset prices to levels that I certainly have never seen in the 20 years that I've been involved in financial markets.
This isn't what the textbooks were suggesting was going to happen, though.
No, it isn't. I mean, you know, every asset manager I've ever met, every stockbroker, every financial service practitioner would have said South Africans would have taken their money, put it on their mattress and run away in a crisis. And that's just not what we're experiencing. Now, it might be because we serve a much younger audience. And so the average age of our customers is under the age of 35. So that they have got a higher risk appetite than just by virtue of their age. But I think the thing that we've forgotten or haven't learned yet is that today's investor is just much smarter, has access to much more information, is much savvier than the generations before him or her. And because of that, they're more capable of making decisions in a crisis. I mean, if you can you imagine this happening 20 years ago, none of us would have had access to the information flows that we have today. Today, you know, Donald Trump's got as much information on COVID as we do. So, you know, everyone's well positioned to take advantage of that information.
I'm going to get rid of that last show. I'm going to ask a question for the audience and get your view on this at the same time. And the question is, when will the JSE reach, or the top 40 reach the bottom? I'm curious to see what those dialing in are actually saying on that one. Has it already happened back in March when we hit that floor and all the news about Sasol. Is it going to be happening in the next couple of weeks, the next month or two? I don't want to lead the audience, Charles, but what's your view on this?
Look, I mean, the best prediction we've got is looking back at the past, and all of the crises, big crises that have preceded us, or this one, have taken longer to reach the bottom than we have. So we've gone down much faster than any crisis before. That's the first thing to understand. So that means that maybe we have hit a bottom, but typically these play out over between 4 and 6 months, even up to 9 months before they hit the bottom. So I think we're getting to grips with understanding the impact of COVID just a little. I think we probably understand 20% of what the economic impacts are going to be. And so I think it's unlikely that we've hit the bottom. I think we're going to see a lot more volatility in the months ahead. And as we gain a better understanding of the economic impact, I think we'll see asset prices go back and test the bottom. But that isn't a signal to say sit back and wait, because my experience has been that you're mostly wrong when you try and predict bottoms. And the real test is, are these good entry prices for an investor, a long-term investor? And the answer to that is they're great entry prices for a long-term investor. You're not buying to make a profit for tomorrow. As good as that feels, it's nice to see green tomorrow, but what we're really buying for is a lot of green 10, 15, 20 years out. And that, whether we buy today or try and pick the bottom in 2 months' time, will be insignificant, the impact. The key thing is to get invested now and to phase those investments in over the next 6 to 9 months and average your entry rather than try and pick a bottom.
So you think that basically in many ways we could well be at a point where I suppose markets and institutional investors in particular have gone into some sort of panic mode in March, and now we're starting to get a bit more clarity about the impact of the virus, and we're getting more clarity about how governments are dealing with it and the approach organizations are taking. We should start to see opportunities coming up thick and fast in certain sectors.
Yeah, and I think, the recovery is going to be bipolar in my view. There are going to be businesses that purport to be digital in nature, that can scale and run their businesses regardless of physical infrastructure. Those are the ones that I think are going to suffer. They're going to get caught that they weren't really ready for this, despite what their strategy statements might say. And then I think the other side of it is we're going to find out who the real digital enablers or business leaders are. Some of them are very obvious to us already, guys like Amazon, good examples of businesses that are going to thrive in this environment, and many others. But the bottom line is, for me, is that the companies that aren't ready for this kind of world and a sustained level are going to suffer for longer. But the big benefactors are going to be the digital warriors that have sort of led this revolution over the last 10 years. They're going to come back much quicker. Their recovery will be much steeper, much faster.
Yeah. I'm hoping you're not going to tell me that you were one of the lucky investors that managed to get into Zoom before they kicked off a couple of months ago.
I use my gut a lot when it comes to investing. I'm an investor in Uber, and you can't find an economic reason to be an investor in Uber. And Zoom, funny enough, I don't know why I didn't buy it, because I remember investigating the platform about 18 months ago. I wish I had bought it back then. But maybe I'll get a second bite at it.
Yeah, especially if they don't sort out their security issues. Right.
Yeah.
Let's go back to easy equities, because actually there's so much that I think we can all learn from the approach that you've taken with easy equities. Do you want to just start at the beginning and tell us actually what easy equities does, what it's all about, who it's for? Yeah.
So as I sort of mentioned, I've been in financial markets for 20 years. For the first 15, wasted my time predominantly. In that, my desire was always to create a platform that, if you like, democratize access to all things investing, starting with shares. And for the first 15 years of my career, I got lost in building derivatives trading platforms for sophisticated traders, which is a thankless task. And I'd lost purpose in what I was doing. And 5 years ago, almost 5.5 years ago now, I came to the point where I wanted to find more purpose in what I was doing. and I reconnected with the reason that I got involved in financial services back then. And I looked at the landscape and summarized all of our strategies into, three kind of pillars where I think we'd failed to embrace the opportunities that were in front of us. And fundamentally, we're building services that were still sort of stuck in the dark ages. And so Easy Equities' foundation or purpose is to democratize all things investing. But its foundation, test case was, can we get South Africans to own shares? And if we can, then the opportunity for us is to scale that into all asset classes, not just shares.
I mean, what made you think that there was a marketplace for this, though? Because, got to say, there are so many different options to go out and invest. It's so much choice out there. There's almost too much choice. So to go in and to offer something which everyone else offers, a lot of people must have looked at you and thought this is a foolish endeavor.
Yeah, and in order for it to work, we needed to back ourselves we had to be the biggest in South Africa before we made any money. That's quite hard to raise money when you're trying to build a business that has to be bigger than your largest competitor before you make a cent of profit. But what gave me confidence that it was the right thing to do was that everyone that I've ever met, if you ask them the simple question, do you want to own shares? The answer every single time is yes. And I don't care what your economic background is, your level of education, your access to capital, your demographic, whatever. The bottom line is every South African I've ever met wants to own shares. So that gave us a lot of confidence. And the other one that gave us a lot of confidence is that when we looked at the friction points in the industry, we stumbled upon things that were easy with hindsight, but the industry kept tripping themselves up on them. And so we really felt like if we addressed those friction points and were committed to solving them, that we could marry this supply-demand problem. If we eliminate the friction points, we could get shares into the hands of every South African.
Did you ever expect to get so big? I mean, I guess when you started, you had some sort of aspirations. You were taking a fair amount of risk. Luckily, you had the history of the other groups in Purple Capital, GT247 and so forth. So you had some sort of confidence. You've got a good network. This was still a risky endeavor, wasn't it?
It was. Risk is sort of in my DNA. So it's hard for me to measure it in the sense that I didn't think about it that much at the time. The plan was ambitious, but interestingly, when I shared the plan with people who have less tolerance for risk than I do, none of them thought it was that ambitious. Our competitors bet against us. In fact, a lot of shareholders bet against us, but the insiders who knew what we were doing, who understood our purpose and what we were building, none of them had any doubts that this was going to work. And the bigger we got, I mean, to start with, we built a platform where we ran a game to test the interfaces, and there were only 2,000 people who participated in that game. 1,800 complained about how difficult the interface was, so we had a lot of work to make it easy. But one of the things that came out of that was it created this extraordinary expectation from first-time investors that investing was going to become easy, and the excitement that created was it was infectious. So from a very early stage, we knew we were onto something that was going to win. We never expected to get this big this quickly. I mean, it's 5 years on, which is a long time in any business. But I'll give you an idea. It took us 4.5 years to get to 100,000 active accounts. It's taken us 6 months to double that number. So it's getting big on us very quickly now. We're beyond the tipping point. And our biggest challenge is no longer trying to find customers. It's trying to keep up with customers, trying to scale the business to meet their demands.
So you set up this business. You mentioned this idea about democratizing investing. This is another of these, what I wasn't expecting this, I suspect. When you set this up, I'm assuming 100% of the goal was to make profit. You saw an opportunity. You thought you could step in and you could, actually make a ton.
It wasn't even part of the founding business plan. I mean, I'm very lucky. One of my biggest shareholders is, one is Mark Barnes and the other one was Ronnie Ludner, who passed away about a year ago. But I literally had lost purpose in what I was doing, and I was struggling to communicate that well to my shareholders. And Ronnie called me aside and he said, look, Charles, you're obviously not enjoying what you're doing anymore. So I said, no, I'm not. And it happened to be December. And he said, look, why don't you go away and find something you want to do that will get you back to work early in the morning. And then we'll worry about how we can make money from it, if at all. And Ronnie's one of the most philanthropic people in the world. I mean, they've got an incredible charitable family. And so we went away and I built easy in my head without ever thinking about the economics. When I came back to my team, the next thing we UX'd the experience. We built the platform on style sheets and mock-ups. And the last thing we did was we built the income statement. We said, okay, well, this is cool. We're all in it. We love the purpose of it. How are we going to make money from it? And it was the last thing that we did. And it's the first business I've ever built where the income statement came last. Every other business I've ever built, you come up with an idea, you go, how do I make money out of this? And then you build the income statement and then you go, well, is it worth doing? And we didn't do it that way. We did this because we knew it was worth doing. And we knew we'd also be able to figure out how we'd make money from it. But it had to be worth doing first. It had to be deeply purposeful. It had to get us out of bed earlier than profits do. I mean, I'm like any other employee. I want to earn a bonus every year. I want to earn a good salary. But I can tell you that the effect is, and the lasting, the effect is very short-lived of a bonus. And it doesn't inspire me to get out of bed or my staff out of bed early. When you find purpose in your organization, it is a much greater motivator than any profit or any bonus could be to shareholders.
We're going to come back to that in a second, but I just want to get this straight. Two things. First, you realize this is being recorded, and you did tell us that you've got no problems with it being socialized and published. And the second thing is you're a CEO of a listed entity, and you're on video here saying that the most important thing was purpose and profit was almost an afterthought, not something your investors, your shareholders, they can't be aligned with this viewpoint. This is radically different to most other listed entities.
Yeah, I mean, I think for many of them, they definitely struggled with it. But I think that they have all, those that have stayed, I mean, because we're listed, I don't really get to track my shareholders that closely, but all the significant ones have stayed. All the big shareholders have stayed. So they've come to grips with it. And in fact, are probably prouder of the business today than when it was making more money 10 years ago. In fact, I don't say probably, they are prouder about what we're doing. They'll wear the t-shirt and stand up proudly for what we do. So they've shifted in that thinking. It wasn't easy to sell it to them at the time, but I can tell you for free now that if I had to rank purpose or profit, it probably ranks higher amongst our shareholders too today. And that's an interesting paradigm shift that's happening, not just in Purple, but I think globally. Businesses with a higher sense of purpose are doing better. And Nike's a really good example of a big company that shifted its purpose quite recently and is doing much better as a result of that.
Do you actually see the evidence that purposeful, even purposeful to the extent of being genuinely altruistic, companies like that are starting to grow faster, to see value growth faster on their share price?
Yeah, and I think it comes to the fact that we live in a much more transparent world, and people therefore are more questioning of what's happening with their money. So shareholders are demanding that companies are more purposeful, do more good, and less harm. And so because of that, companies that do that are attracting more shareholders. And especially I don't like to label millennials, because I still think I'm a millennial and I'm a long way past millennial. But I think the millennial mindset has got a much stronger community, purposeful drive than just seeking out profits at all costs. I think humans have probably always been that way. It's not that we've changed, but I think as businesses have become more transparent about their practices, we've learned that we don't want to make money the way we made money in the past. It's not worth the cost anymore. And we could get away with it in the past because we didn't have to tell anyone. All we did was report on profits. Now we have to report on everything. And so I think today's investor is much more discerning about if he can seek out profits with purpose over pure profits, they're going to choose profits with purpose.
If I look internationally, I can think of a few organizations that seem to have genuinely purposeful strategies. So Tesla, for example, you know, their goal isn't to build cars, they're there to make sustainable transport commonplace. Google seems to have been quite purposeful for a long period of time. Amazon, wouldn't say that it's quite the same. They just want to be the most client-centric organization in the world, but I still see the way they reinvest massive amounts of their cash flow for innovation to continue, you know, being market leaders in that kind of e-com and in that space. What about in South Africa though? Are there any companies that you can sort of flag that you think are you know, using this purposeful strategy and approach?
It's starting, you know, you're starting to see more and more of it than you did in the past. Discovery is one that comes to mind immediately. You know, I think that they for a long time have put purpose at the center of their business. I mean, and that purpose was to make you healthier. And, you know, that's now extending into healthier banking and everything being healthier. But that's a great example of a business that has taken it seriously, and it for me is a standout. And whether or not it was purpose, it started that way, I don't know, you know, but I think it's ended up that way, and it is such a strong purpose and creates such a strong focus for that group that it seems to drive everything from innovation, product development, customer, everything. So that's the standout for me in the South African context.
And apart from that, it's looking a bit light, unfortunately.
Yeah, you know, I think SAB was one that actually, you know, despite the fact that it sells sin goods, SAB was at a strong sense of purpose. I remember in the early days. I wonder about it now. Yeah, but it's a thin crowd at the moment.
All right, so you've managed to get the shareholders on board. You've managed to convince a few people to back it and to go down this sort of crazy route of democratizing investing. How do you go and get people to go and support you on this? Because you may as well have just written a note to them as like an internal memo and say, come and help me set up this democratized investing club. And because we're going to make really thin, tight margins, and when we start, we've got no customers, you'll be lucky if we can pay you a cent in terms of salary, and please don't expect any bonuses. How do you go and get people to want to go and participate in that?
Yeah, you know, at the center, a lot of people look at a fintech business, and I've been doing fintech before it was called fintech. It was just tech, now it's fintech, but it's fintech's become quite sexy, and it's, you know, it's got its own brand and its own momentum now. But for me, too much emphasis on fintech is placed on platforms. Platforms is probably today one of the least defendable differentiators. I mean, you know, somebody who steals with their eyes can do everything that we do already. So, you know, how do you attract good people and retain them? It has to be in the DNA of the organization and the people side. And 50% of our success has been getting the culture of the organization right. And I only ascribe 50% to our products and services and platform. And in getting that right, there's sort of three key enablers in our people DNA that have created a platform or environment for to attract and retain excellent people. The first is that we place purpose ahead of profit, and I've talked about that a lot, so I won't say more about that. The other one is that we've created a culture that is brave enough to fail and in order to succeed. And even with our customers, I mean, this is something that I think as South Africans we're really bad at. We're not good at failing. We don't like losing the World Cup. I don't know if anyone ever got awarded a badge for the highest failure rate at university or at school. I don't know an academic system that embraces failure in this country. And so as corporate CEO, having experienced failure, I can tell you that it's easy to walk away from it. It would be easier to walk away from failure than to embrace it and cultivate it and learn from it. And the Yanks are so good at it. The Americans are really good at it. And so for us, we felt that if we were going to beat our competitors, we weren't going to beat them with balance sheet. We had to beat them by moving faster. And if you commit to moving faster, being more innovative, more agile, then you must accept that you're going to fail spectacularly at some times. And anybody who follows us on Twitter will know that we fail from time to time, right in front of our customers. We have very recently, this last week, in scaling our businesses, we didn't keep up. And today, thankfully, I can say that we're ahead of the curve again. But our customers are trusting in us and accepting that if they want to commit to this fast-paced, agile change, then they have to be committing to that failure. And it's amazing when you create a safe place for staff to fail, how rewarding and enabling that is for them. You know, what are you scared of? You're not scared of failing and losing your job. What you're scared of is failing to try rather than, failing. And the third part of our DNA is that we place the culture of the organization, the health of our staff, which we measure way ahead of the health of our strategy. I mean, I've built a few businesses in my life, none of them anywhere near the success of Easy Equities. And all of them had much better strategy documents. None of them had the people DNA that we've created in Easy. And it's hard to touch what it is. Like somebody said to me, can you recreate it? I don't think I can. For me, it's a bit like a witch's cauldron. You throw in lots of things, and at some point, the pot boils and magic is created. And it's not the last thing you threw in, and it's definitely not the first thing that you put in, but it's the combination of everything that we're doing. And it's come from, 15 years of experience and lots of failure and lots of learning to get it to the point where it's working and there's magic. And now we're very protective of it. We want to make sure that we keep that environment and we keep attracting the best talent. And it's funny, talent attracts talent. Rewarding staff by trusting them, I think, is a key aspect of our business. So, the more we trust you, the more license you have to do more, to work from home, to work on the projects that you choose to work on the initiatives that interest you the most. Those are all, I think, the ingredients that will attract and retain talent in the future. Paying them a fair wage is always important. It has to be a fair wage. It can't be slave labor. But paying them the most in the industry, that game's for institutions not like Purple Group.
Raksha, what have you got coming through on the Q&A? I'm still stunned by, many of the things that you've suggested there, but we'll come back to that in a second. What have we got coming through, particularly around the running of the company? I know there's lots of questions about what's happening in the crystal ball gazing of the stock market. Maybe we can do that at the end. Have we got any related to how Charles is running the company?
I think a big theme that's coming across is there's a lot of interest around purpose over profit. I think people are still trying to get their minds around that, and they want to understand how this was born and where this has come from, and how you have become comfortable being in this space.
Yeah, let's start with the last question. I've been in the space for a long time now, so 20 years will give you. I've seen the bear market, I've seen bull markets and bear markets. One thing I can say for certain, I've learned nothing from rising assets. You learn most from assets that are depreciating fast. So a lot of the being comfortable, creating comfort it comes from the experience of having lived through these kind of periods, these COVID kind of times. So having seen, two major crashes in my time, I've become very comfortable. One thing that as an organization, we are incredibly comfortable with is change. It's part of our DNA. If you don't like change, you won't fit in. Even when we hire accountants, we challenge them, because inside the business, we probably create between 3 and 5 new income statements every 6 months from different products and different services. And so we're not even an accountant at Purple gets to be comfortable without an extraordinary amount of change. So for us, it's about, we've seen, we've been around a bit. More than 20 of my staff have been with me for longer than 10 years. There are only 80 of us. So that's a lot of experience in the team. That gives us a lot of comfort. And then importantly, we hire people that are very comfortable in a space that is changing fast. Able to adapt to change quickly.
Marius Mayer, our CEO of Cybrin, one of our IP businesses, wants to know if being purpose-led is age-related.
Sure, it's a good question. It certainly has been with me. I've wondered about this actually. if I think about my career, I definitely chased the money early on. So, and that I could put that down to age, or I could put it down to mentorship. I mean, my early mentors were people that were fixated on the income statement of a business. So it's probably a combination of both. It's certainly, as I've got older, I've wanted to find more purpose in what I wanted to do. But the reason for that it was because I wanted to stay forever. I realized that if I didn't find purpose in what I was doing, I was just going to leave. And I didn't want to do that. Why do you want your best skills, best skills? I don't want to say that. I'm not the best skilled. Why do you want your most experienced skills to leave? And you don't. And so in retaining myself, I wanted to ensure that we created something that was beyond the income statement. And that's what purpose gave me. So I think there is an age related, there's an experience related, but I also think that, look at our customers. Our customers are more purposeful than I would ever have expected. I'll give you an example. We launched Donate for Good on the platform a week ago, which is you can now, every time you transact, every time you buy or sell a share, you can donate to the Solidarity Fund. We've raised more money from that than our customers have paid us in brokerage in the same period. You've got to think about that. They're happy to give away more than they pay for the service that we give. So they're purposeful in their endeavors, and they're young. So, maybe it's not an age thing. Maybe we were just badly schooled, us 40-something-year-olds.
Charles, I wonder if you know that IOCO, which is one of our largest operating segments, part of the EOH group, actually built the web presence for the Solidarity Fund.
Oh, that's so cool, man. Well, you can tell them we're going to need thousands of tax reports for our customers, because we've gone out on a limb and said we'll get you tax statements, all of them. And to date, that means we need about 30,000 tax statements. We're just getting started. So they're going to have a tech challenge coming at them.
Jeepers. Two last questions, Colin, if I may, from two of our millennials. Mosima Mokwena, who works as part of in our Next Tech operating segment. She says that Easy Equity seems to be quite an affordable platform. I don't know if you're allowed to answer this, but what is your model that you use to ensure maximum profit for your business? And the second question is, can you tell us a bit more about Thrive 50?
Okay, cool, man. So how do we sustain profitability, and are we the cheapest? So let me start with the first one. We happen to be the cheapest in a lot of respects. It isn't our purpose. It wasn't our purpose. It wasn't our strategy to be the cheapest. In understanding the friction points in financial services, we realized that in order to eliminate those friction points, we had to be cheaper than everyone else. So it was by design, in understanding what the friction points were, that we ended up being cheapest. Cheapest is not a strategy. It's the easiest thing in the world to be cheaper than somebody else, and someone will replace us as cheapest. So what we look to do and how we sustain profitability is that we take a fair margin at every point of a service that we offer you. Every time you transact, every time you buy a product or sell a product, every time you do an FX transfer, every time you do anything on the platform, there is a reasonable fee, a fair fee charged, which is always in the cheapest category, but not necessarily the cheapest. And for us, that's how we're sustainable, is that a lot of our competitors play in a single silo. So if I give you an example, internationally, the biggest DIY stockbroker is a crowd called Robinhood. They only make money when you trade. And so everything is built around the transactional capabilities, leveraging the transactional capabilities of that platform. We don't only make money when you trade. We make money when you leave assets on our platform, so cash. We make money when you move assets from our platform to the US, so in the FX transfer process. We make money on script lending and all sorts of other revenue streams. And the benefit of that is that we don't have to be hungry in any of those silos. We can charge a fair margin, but in the result, get a very healthy margin out of our customers. And that's how we sustain our profitability. And it is, I mean, the big thing is we had to get to scale before we made money. You know, to get to scale, we had to get to 100,000 active customers. So Standard Bank, which at last count that I saw, they have got about 70,000 active customers. They're the biggest. We had to be bigger than them before we made a cent. So you have to back yourself into a bold business plan. And fortunately, we got there.
So let's chat. I mean, surprise me again, your staff. I mean, how do you make sure that they're doing the right thing? You know, especially now where most of them, I guess, are working from home. I'm imagining you've got timesheets and KPIs galore and all sorts of things just to go and check on them, you know, because you're not with them every single day.
Yeah. Like an ex-ABSA banker. No, we've got none of those things. So we have 3 business zones. We have no hierarchy starting point. So yeah, in this engagement, I'm CEO of Purple Group. In my office, I'm just a participator in various projects. So we don't have any hierarchy, firstly. Secondly, the teams are constructed from, we call them GROW, which is, the name is self-explanatory. There's a growth team that focuses on new product development, new customer acquisition lines, distribution. Then there's Engage, which is about the health of our community, our customers and our staff and our shareholders. And then the last team is Platform, which again is self-explanatory. Make sure everything is running smoothly, is scaling, etc. People, the entire business self-selects where they want to play in those zones. Some of it's obvious to them. So if you're a developer, you're not going to find yourself in Team Grow. But there are lots of projects that developers might choose to be on that they end up in Grow. So that's the first point, is people self-select where they are. The second one is once they do, they join teams and are then responsible and accountable to that team for delivery. And so the only measurement is whether or not they're making a contribution in that team. And the team decides that, not me, not the senior managers, it's the team. And if you're not making a contribution in a team, it's very evident to the members. And so they'll kick you out. And if too many teams kick you out, you'll have no teams to play in anymore. And then you just self-exit. So no, we don't do any of that stuff. For me, having grown up in a world that embraced hierarchy, loved it, and thrived on it, to be honest, it was almost impossible for me to let it go as much as I wanted to. I found it very difficult to let it go. But the fundamental in letting it go is that you have to trust in your staff. And the one lesson that I've learned from life is you can trust 99.9% of the people you meet. And then, so why do we create these hierarchies and measures and controls to catch the 0.1% that we can't trust? Let the teams kick them out. So no, we've got none of that stuff.
How did you just come up with that model? Because I can't think of many companies in the world that would give that level of trust to their staff, especially because you're a listed entity. I want to repeat that again. It's so rare.
Yeah, it was a deep desire and commitment to broaden the accountable individuals in the organization. So one of the things that was wearing on me was that I found that every decision was coming to me, regardless of whether I should make it or not. And I was getting sort of tired of it. Like, they're just decisions that, 1, I'm not interested in, 2, I don't have the context, and 3, it was a waste of my time. And 4, it was creating stress in areas that I didn't require. Why should I be stressed about that? So I wanted to broaden the accountability in the organizations. I read a lot of books and I studied a lot of operating models, and then stumbled upon Agile as a framework. And I read, I can't remember which was the first review I read of it, but I think the first book I read was Agile People. And within a chapter, I was like, that's what I want. That's the environment that I want to be able to work within. And as CEO, the realization I came to, I said, if I'm going to create that environment for myself, why can I not give it to everyone? Why can't everyone operate in that way? And of course, Agile demands that. Agile demands that the CEO has the same latitude as the tea lady. So it was actually it was a selfish endeavor to de-stress my world, and to make less decisions so that I could focus on the work that I was really inspired by and the decisions that I really had the knowledge and experience to make. And that's what led me there. And it's been the most rewarding thing I've ever done from a management perspective by far, is trusting in others to make decisions. They make so much better decisions than I do.
Do you think it's possible to run that model if purpose wasn't your kind of foundational cornerstone and you were profit driven?
No, I don't think so. In fact, I know it wouldn't be. You'd get the wrong outcomes. There are a lot of decisions where purpose trumps profit. Lots. I mean, every day we're confronted with those challenges. And if purpose wasn't central in the DNA of our staff, and deeply understanding and trusting in that purpose, then no, we'd make the wrong decisions. And that's, I guess, the part that's the reason I can't replicate what we've done here with money. If I could take another 200 million and replicate what we've done here with money, then other people would do it too. I don't think you can replicate what we've done here with money, with the same people maybe, and money. But I think there's some magic in what we're doing amongst our people, and it's more valuable than any of the money that we've been given to do it with.
One of the questions that came through on which I picked up, which I really like, how do incumbents, say, let's take EOH as an example, if they want to go and transition more to this purposeful strategy, purposeful leadership style, how easy is it to do that? Is it even possible?
It isn't easy. I mean, it isn't easy. If you think about us as an organization, and we're small, it took us 15 years to work out what our purpose was, and it's taken us, and we're 5.5 years into that journey, and we're about 10% of the journey there. So we're getting better and better all the time. I think the bigger you are as an organization, the harder it is, because at the center of it, I think, is that everyone has to buy in. Everyone has to, that purpose has to resonate with them. They have to be able to proudly wear it in everything that they do, and they have to trust explicitly in it. And I think in larger organizations, that's very, very difficult to do. I mean, I wouldn't be able to do that in an organization the same size as EOH, but that's, I guess, why I'm not CEO of EOH and others are. So it's not an easy thing to do. Can you do it? Of course you can. Nike's a great example of an organization that found purpose very late in its career and did it very quickly. I mean, I think it was only 3 or 4 years ago that they shifted that, and they've been able to transition and live it out, and it's made a big impact on their business. So for sure, you can do it. I don't think it's easy though. What's
left to do there? I mean, how do you actually pay your individuals? How, you talked about teams. They can go and basically join the team that they want. How do you actually work out what to pay who in that type of environment without metrics? Actually, I'm jumping the gun there. What metrics do you set for your individuals and the staff within the company? Do you set any?
Yeah, so what we do is we have what we call key initiatives or projects, and we agree those at the beginning of a year. So we plan in any year we will run about 10 key initiatives, key big projects, and the outcomes based of those. Each of those projects have got a budget, they've got and they've got a value that we ascribe to them. And then your contribution in those projects is measured by your teammates, by the outcomes that you've created, and your teammates then decide, therefore, what you get out of it. So let's just take a simple example. If we were creating, a life insurance product, which is something that we'll do probably next year, the economic outcome of that project, the budget for that would probably be in the region of 5 to 6 million rand to build it. And the economic impact, if we get it right, will probably be 30 to 40 million over 3 years in revenue. And the way that your contribution will be measured is what contribution did you make to getting that live within the budget constraints and within the timeframes. And then based on that, the team evaluation of that, you would be measured for a bonus against that project delivering against the revenue targets that it's achieved. So yeah, there are metrics, but they're defined by the projects and initiatives that we take on, and then your contribution or part in it is measured by your team.
Fascinating. It's almost going down a model where you're getting close to holacracy.
Yeah, it's interesting. So, I mean, this is probably the hardest part of Agile, is pay. How do you reward pay? Because Agile actually at its foundation says you can't link pay and performance. It breaks the Agile kind of model. And we're all wired in our DNA to measure and reward performance with pay. But it is, I mean, we've run tests, we've run small projects with small amounts of money where, we've got a team of 10 people and the budget is 100,000 Rand and the bonus is 10,000 Rand if they delivered on time. And then they stand in a room and evaluate everyone's contribution and then based on that hand out checks. And they've been fascinating experiments. You get the truth pretty quickly. It's not an easy conversation, but it's a very adult one. And you need moderators in the room. You need to ensure that the conversation stays in line or on track. But we've done it a lot now, and it's the hardest part. We're not there yet, by no means are we there. But our journey towards 100% agile was a 5-year goal, and we're 2 years away from it. And we will get there. We'll get there within that time frame.
I don't know if you follow the learnings from people like Ray Dalio. With his theories, his principles, that was named the book he wrote, Principles, his theories of radical transparency. Everything's recorded, everything is shared, even salaries and bonuses are shared amongst people. Have you gone that far yet where there are no secrets within the organization, all the way down to pay?
Yeah, we haven't got all the way there. But I mean, firstly, we're listed. So yeah, the top executive team pay is there for everyone to see. So, there's 100% transparency on my pay. So as a starting point, well, if I must live by those rules, why shouldn't everyone else? I mean, why should I be transparent on mine? But we haven't got there yet. There are sensitivities around it, and we are working on those. I would say that about 50 to 60% of our organization, in terms of the pay structures, are well understood. Certainly the bonus mechanisms are very transparent. The quantum of the bonus pool, your size of it relative to other people's size is transparent. And why you got marked up versus marked down is also very transparent amongst your team. So we're getting there, but I would say we're 50 to 60% of that journey.
On the trust side of things, Netflix are obviously very famous. One of the things that they're famous from a consultancy and sort of Harvard Business Review business model perspective is that they're very proud of the fact that their staff don't have to go and book holidays. There's no real concept of holidays. Staff are just expected to deliver, and if it's 1 day a year, then that's awesome. If it's 365 days a year, you don't have to go and say, I'm having these 4 weeks off, and you're limited to 4 weeks. Have you thought about introducing those type of systems yet?
Yeah, I mean, that's the dream. And it comes from the fact that I want to be able to work remotely from anywhere that I want to be. I still want to make a contribution regardless of where I am to the group. And I want to, in time, work only with people that inspire me and get me, if you like. So I'm quite selfish about that desire. And if I get that right, then I'll stay. I'll never leave the organization. The shareholders might vote me out, but there'll be no reason for me to go other than that. And so the dream is that we enable that for everyone. And as a digital business with 99% of our business is online, we can live that out. And funny enough, the unintended outcome of COVID is that our excuse for people to come to work to perform a job has just about evaporated. And I was talking, our business was well on this path, but I was talking to businesses other businesses that are living through this. And all of them, one thing that's been consistent amongst every other person I've spoken to is that the productivity levels of their staff have gone up and not down. Now, I think there are two influencing factors there, or two things we've got to worry about. I think one, people are working longer hours than they should because we're online and we haven't got the work-life balance, and that could be destructive if we don't get that right. But the second one, which goes to your point on trust, is you can trust your staff to do the right thing. And when you do, and you place that trust in them, you get more back. So I'm going to give you a very small example. 4 of our staff live overseas. They didn't live overseas before. They lived here in South Africa. And 3 of them, funny enough, live in Portugal now, and not in the same place. And they were, I guess, our kind of experiment on Agile and working remotely. All of them are more productive and they've been away from the business for over a year now. All of them are more productive than they were before. All of them are happier than they were before. All of them are working from home, and all of them have got no reason to leave anymore. Whereas before, the fact that they wanted to immigrate would have been a reason to leave. And it's interesting in talking to them, in understanding why they're more productive. Their response is, because you trusted in me to behave appropriately, I feel like the way that I can repay that trust is to be more productive, to give you more back. And, I guess that's what I would have expected with hindsight, but is it really what we expect as business? Because if we did expect that, we wouldn't have these ridiculous rules. If we trusted in our staff, we wouldn't even have to sign contracts and performance clauses and have KPIs and any of those things. So, yeah, for us, that is where we're going to go. If we don't get there, we'll lose our best talent. It is probably the biggest reward you can give someone, is to trust them enough to let them work from where they want to work, with the people they want to work on, the projects and initiatives they want to work on. And I wish I was 20 and entering the workspace, because if I was, I would demand it from my workspace. I would not go and work anywhere that didn't allow me, that didn't trust in me enough to do that.
What advice do you have for EOH? I know you follow and study them closely.
Yeah, I mean, I think for me, at the center of the issue is obviously trust. And I think I would be razor focused on just building the internal trust structures. I think that when the staff of EOH can turn around to each other and say, we trust you 100% explicitly, we trust the organization 100%, then you're ready to go to market again. I think until you do that, I think it's going to be fits and bursts in terms of your success. And that might mean, and I think shareholders, it might be a bitter pill for shareholders to swallow, because I think shareholders probably want you to get back to business faster. But I think you have to be 100% confident, and your staff have to be 100% confident that you can trust each other again. Because if you do, your customers will start trusting you again. So I would be spending all of my time on ensuring that the health of the trust value in the business was at 100%.
All of these points that you've raised have really been in that odd, I wasn't expecting that. They're certainly not the standard norm to build a successful and profitable organization. I'd love to talk for another hour. I wasn't expecting any of those could lead to a successful business model. And I just want to thank you, Charles, on behalf of everyone, for sharing your experiences. And I hope it really inspires some people to start trying some of these ideas.
Cool, man. Thanks very much for the opportunity. I love sharing our story. And I'm grateful for the opportunity to speak to so many of you.